Before AI starts deciding which patterns are proofs alone, it quietly watches how you move, type, speak, and behave online. In today's digital financial system, identity is no longer just a name or an Etisatu-D number. It's a pattern. And once Etisatu starts deciding which patterns are safe and which are risky, the stakes go far beyond fraud prevention. This video explores how AI-powered identity systems are reshaping trust, privacy, and access to money itself, and why understanding this shift might matter more to your future than you think. What if the face you see on your screen isn't real? What if the voice authorizing a transaction was generated by an AI Satu? And what if the biggest threat to digital finance today isn't hackers breaking in, but fake humans walking straight through the front door? Welcome to the next era of financial crime. As artificial intelligence becomes more powerful, fraud is evolving faster than ever before. Deepfakes, synthetic identities, and AI-generated scams are no longer futuristic threats. They are already disrupting banks, fintech platforms, and digital payment systems worldwide. And this is where today's story begins, because one of the world's largest data and risk intelligence companies, Lexisnexis Risk Solutions, has just launched an enhanced AI-powered platform designed to fight back. This video explores how AI Satu tools are being used to combat AI-driven fraud, why identity verification is becoming the front line of financial security, and what this means for the future of trust in a digital economy. The rise of AI-driven fraud. For decades, fraud followed predictable patterns: stolen passwords, phishing emails, credit card skimming. Banks built systems to detect anomalies, unusual locations, strange transactions, abnormal spending behavior. But AI has changed the game. Today's fraudsters don't just steal identities, they manufacture them. Deepfake videos can replicate faces with astonishing accuracy. AI Satu voice models can mimic real people in seconds. Synthetic identities combine real and fake data to create people who don't exist yet pass traditional verification checks. These attacks are scalable, automated, and increasingly difficult to detect. And crucially, they exploit trust, the very foundation of digital finance. Why identity is the new battlefield? In a cashless world, identity equals access. If you can prove who you are, you can open accounts, move money, access credit, cross borders digitally. That makes identity verification the most valuable and vulnerable layer of the financial system. Traditional ID checks were built for a pre-AI era. Static photos, document scans, knowledge-based questions. But AI doesn't play by static rules. It adapts, it learns, it improves with every attempt, which means identity systems must now fight intelligence with intelligence. What is Lexisnexis Idverse? Lexisnexis Risk Solutions is not a startup. It's a global risk intelligence company whose tools are already used by banks, fintech platforms, governments, payment networks, compliance teams. Its IDverse platform is designed to verify identities using a layered AI-driven approach. The newly enhanced version focuses specifically on detecting deepfakes, preventing AI-generated fraud, strengthening digital identity trust. Instead of relying on a single signal, IDverse combines biometric analysis, behavioral patterns, document verification, device intelligence, risk scoring models. The goal is simple: make it exponentially harder for fake identities to pass as real humans. How AI tools fight AI fraud. Here's the paradox of modern finance. The same technology that enables fraud, AI Satu, is also the most powerful weapon against it. Lexisnexis' approach reflects a broader industry shift. AI Satu models trained to detect inconsistencies invisible to humans, systems that analyze micro-expressions, movement patterns, and behavioral cues, machine learning that adapts as fraud tactics evolve. For example, a deepfake might look real to the human eye, but AI Satu can detect unnatural pixel patterns, timing irregularities, or biometric mismatches. A synthetic identity may pass document checks but fail when cross-referenced with behavioral data and network signals. This is not about catching criminals after the fact. It's about preventing fraud before it happens. Why this matters for fintech and digital payments. As payments become faster, more global, and more seamless, the cost of failure increases. A single breach can destroy consumer trust, trigger regulatory penalties, damage entire ecosystems. Fintech platforms depend on speed and user experience, but security can no longer be invisible. AI-powered identity tools like IDverse represent a new compromise: stronger protection, minimal friction, continuous verification instead of one-time checks. In this model, security becomes dynamic, constantly evaluating trust rather than assuming it. The bigger picture: trust in the AI economy. This story isn't just about Lexisnexis, it's about a fundamental shift in how digital systems define trust. In an AI-driven world, seeing is no longer believing. Knowing someone's name is not enough. Identity must be verified continuously, intelligently, and ethically. Akasatu, tools will not eliminate fraud, but without them, fraud will outpace defense. The future of digital finance depends on one question: can we build systems smart enough to protect trust without destroying convenience? Because in the age of AI Satu, the most valuable asset isn't money, it's identity. When security becomes surveillance, AI-powered identity tools promise protection. But protection comes at a cost. To detect fraud, systems must observe behavior: how you move your phone, how fast you type, how your face reacts, where you log in, when you transact, how often you hesitate. Individually, these signals seem harmless. Collectively, they form a behavioral profile. This is where the line between security and surveillance becomes blurred. Not surveillance in the cinematic sense, number one is watching you live, but in a statistical sense, your behavior is continuously measured, scored, and compared. The system doesn't need to know who you are. It only needs to know how closely you resemble a trusted pattern, and anything that deviates becomes a risk. The invisible power of risk scores. One of the most powerful outputs of AI identity systems is the risk score. A single number can decide whether your account is approved, whether your transaction is blocked, whether your identity is trusted enough. But here's the problem: most users never see this score. They don't know how it's calculated, and they can't challenge it easily. This creates asymmetry of power. Platforms understand users deeply. Users understand platforms very little. When access to money depends on opaque algorithms, trust becomes conditional, not revoked loudly, but quietly. Bias in AI identity systems. AI systems are only as neutral as the data they learn from, and identity data is not evenly distributed across populations. Historically marginalized groups may have less consistent documentation, change devices more frequently, share phones or networks, operate outside traditional banking systems. To an AI model, these patterns can look like risk. Even without malicious intent, structural bias can emerge. This is why companies like Lexisnexis emphasize multi-layer verification, continuous model retraining, bias detection frameworks. But bias is not a bug you fix once. It's an ongoing tension between security, inclusion, efficiency, and every design choice reflects a value judgment. Fraud prevention, kalimas, financial inclusion. Here's the paradox. Akasatu, identity tools are often marketed as enablers of inclusion. Faster onboarding, fewer manual checks, remote access to finance, and in many cases, that's true. But inclusion has conditions. To participate fully, users must own compatible devices, maintain stable digital footprints, behave predictably enough for algorithms. Those who fall outside these norms risk exclusion, not because they did something wrong, but because they don't fit the model. In a fully digital economy, identity becomes destiny. Who sets the rules? Akasatu, tools like IDverse don't operate in a vacuum. They exist within regulatory frameworks, corporate incentives, market pressures. Governments demand stronger fraud prevention. Banks demand lower losses. Platforms demand smoother user experiences. Privacy often becomes a secondary concern, addressed but rarely prioritized. This raises a crucial question. Who decides what level of surveillance is acceptable in the name of security? Because once systems are built, rolling them back is difficult. Infrastructure shapes behavior. The future of trust. Trust used to be interpersonal. Now it's computational. In the AI Kasatu economy, trust is scored, updated, revoked, reinstated. And the danger isn't that AI tools exist. The danger is that they become invisible defaults, never questioned because they work. The challenge ahead is not choosing between security and freedom. It's designing systems where protection doesn't erase autonomy, inclusion doesn't require conformity, and trust is earned transparently, not assumed silently.